You are tuned into the 5-Minute Signal, Business and Wealth. I am Vivian Thorne, economic strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here. We do strategy. 5 minutes on the clock. Let's get to work. The S&P 500 closed yesterday, February 4, 2026, at approximately 6,883. We saw a decline of 0.51%, a figure that signals a significant exhaustion after the relentless gains of 2025. While futures are pointing to a slightly higher open near 6,920, the reality on the floor is one of volatility and hesitation. We have peaked near the 7,000 mark earlier, and each time the market has flinched. The momentum that carried us through the last fiscal year is hitting a wall of reality. Tech sector pressure is mounting, and the fear that was once whispered in the corners of trading floors is now beginning to creep into the midday charts. This matters because the software erosion is no longer a theory, it's a line item. The slump in NASDAQ-linked names represents a fundamental shift in how we value productivity. For a decade, enterprise software was the market's crown jewel. Now, AI-driven autonomous agents are making legacy per-seat licensing models look like expensive relics. We are also on the precipice of Amazon's earnings. Their guidance on cloud and e-commerce will be the litmus test for whether this expansion has hit its ceiling. With the ECB and Bank of England shifting policy, capital is becoming increasingly nervous and mobile. You are not witnessing a dip, you are witnessing a revaluation of the entire tech stack. The hard truth is this: the easy money of the AI hype cycle is over. We are entering the efficiency execution phase, and it is going to be bloody. Many of the tech names currently sitting in your portfolios are walking dead companies, businesses that grew on the promise of AI but are now being decimated by its actual application. The market is realizing that AI doesn't just create value, it destroys outdated revenue streams with terrifying speed. Conventional wisdom tells you to buy the dip and wait for the 7,000-point breakout. I am telling you that the dip you are buying might be a falling knife. The 7,000 mark is not just a number, it is a ceiling built on the realization that 2025's growth was borrowed from 2026's reality. If you are waiting for a return to the mindless up-only trajectory, you are not a strategist. You are a victim in waiting. Moral strength in this market comes from acknowledging that the old winners are likely the new losers. Here are your 3 actionable moves for today's climate. First, for the active trader. If you are operating in the intraday space, your play is the resistance fade. With the current neutral to bearish bias and the index struggling at the 6,920 fair value adjustment, look for signs of exhaustion at the open. Do not chase the morning green. Instead, wait for the failed retest of yesterday's highs and position yourself for the pullback. High-frequency volatility is your tool, but only if you respect the 7,000 resistance level as an iron barrier. Second, for the long-term holder, it is time for a software stress test. Review your tech holdings specifically for SaaS exposure. If a company in your portfolio relies on a per-seat licensing model that can be automated away by the current generation of AI tools, you are holding a depreciating asset. Reallocate that capital toward infrastructure and energy, the literal power behind the AI evolution, rather than the software that is being commoditized. Loyalty to a brand name is a luxury you cannot afford when the underlying technology is shifting. Third, for the investor currently on the sidelines, your move is strategic observation. Do not be lured into the market by a two-day rally. Wait for the Amazon earnings and the subsequent central bank commentary to settle. The current light data on claims and productivity is the calm before a potential storm. Your entry point should not be determined by a desire to be in the market, but by a clear signal that the 6,800 support level is holding with high volume. Until then, cash is not trash, it is ammunition. Success in this market is not about how much you can gain, but how little you are willing to lose while others are being reckless. I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. This program is for informational and educational purposes only. Economic strategist Vivian Thorne is not a licensed financial advisor. Always consult with a qualified professional before making any financial decisions.